Okay, recording has started. Just for purposes of recording, it's September 26th. My name is Brian Wilson. I'm joined by Henry Howard today. Tim is on the road. He should be back for next week's event. Henry, any luck on your side with voice
so.
right now? No,
Can you hear me?
Nothing so far.
Nothing.
That is okay, my friend. We'll see what happens. Maybe just go in and come back out and see if that resolves things. Well, certainly very interesting trading here in late September. Number of things to come through. Okay, they can hear you.
All
okay?
Right. I'm good. Yeah, I think so. I jumped out and I jumped
Maybe
back.
The issue's on my side.
I think the issue might be on your side.
It's on your side. We can hear him.
Okay. Well, I'm not sure exactly what's. Henry, can you hear me okay?
Thinking Brian couldn't hear.
Can you give me a thumbs up if you're hearing me fine, guys? Okay. For some reason, thank you. For some reason, I can't hear you, Henry. That's so strange.
Okay.
Well, we'll just proceed.
Yeah, that's okay.
I won't be able to hear Henry, at least for now. That's the oddest thing. But we'll pick it up. Tell you what, Henry, I'm gonna turn it over to. Okay, well, I'll turn it over to you, Henry, and you can cover what you wanted to cover. I'm not going to be able to hear what you're presenting, unfortunately. I'll come out and go back in and see if that resolves anything on my side. But I'll let you go ahead with what you were going to cover, and I'll be right back.
That's great, and sorry for the difficulties. Normally we have this down packed. But again, my name is Henry Howard. I'm the Director of Client Services here at Edge. I also write the Wednesday desk notes, and what I like to do, have a really consistent process. I am a discretionary trader, but I have a number of data sets that I have to reach in order to make those discretionary decisions. So what I'm going to do right now is I'm going to walk you through my daily trading process, how I read Edge, and then we're going to talk about a little bit about context. And then by that point in time, we should have Brian back on the call. So what I wanted to first go over, obviously, those of you who are new, this is our Market Structure Edge desk. This is our dashboard. So the first thing that I'm really keeping an eye on right now is broad market sentiment. Brian mentioned this morning in the desk note that broad market sentiment, it's not necessarily that we're going to fall apart over the red line, but the concept is that the return over the red line, over this 6 line, the returns tend to go away over that line. And so even I mentioned it yesterday, even though everything's still pointing north, we still had at least a day as we got through options expirations and sort of got a clear read on the day. So that's my first look, is looking at broad market sentiment. We've been saying, I want to bring your attention to short volume supply down here. We've been saying right now, what's been happening in the market. If we're talking about market structure, first of all, people are continuing to own. We're going to look at big tech. They're continuing to own the underlying stock, and meanwhile, they're hedging the index. So the reason people do this is, much more liquid. We can use derivatives, and we can unravel these ETFs, these sort of marked instruments. But meanwhile, we don't have to divest in the actual underlying assets. So we've seen this for a while, the market fully hedged, but we continue to see this demand for the last week. So as this demand has picked up, we've continued to see the market rise. Obviously we had the Fed announcement recently that was driving a lot of action before that, but we are still fully hedged. So that's broad market sentiment is the number one first thing I look at each day. The second thing that I go to is we have our default momentum and low volatility portfolios. So those of you who are new, what I'm looking for is the number of components in momentum and the number of components in low volatility. Tim wrote about this. I think it was 20 and 20 on On Tuesday, it was 20 components in momentum, 20 components in low volatility. And so that's what we want to see, anywhere between 15 and 25 components in these portfolios gives us an indication that this move is still happening. What is likely as broad market sentiment gets to 6.8, and the likelihood of us seeing a declining number of names in momentum portfolio, and that'll kind of signal to us a shift and sort of a risk off. It doesn't necessarily mean that we're going to fall or decline, but the probability of gains start to deteriorate a little bit. So that's step number 2, is checking these two, the number of components in each of these portfolios. After that, I don't want to sound repetitive, but I'm going to go into big tech. Just a significant amount, portion of market cap is in big tech. I think Tim mentioned recently in the email, if you're trading futures, big tech is an excellent place to look for signals of what's happening in the market, where we are in this current move. So I'll go down here. I'll look at big tech. I like to look at the the graph is helpful. You can kind of see, similar to our broad market, that we have this sort of peaking tech. But what I really like to go down here and do is I'll sort by market cap. So again, if you're new, we have all these filters you can sort by. I like to sort by market cap because it just shows me where we are, what are the biggest components, what are these top 5 components, 7 components doing. I'll point out Apple. So Apple's, continues to struggle on the upside. Look at the supply for Apple. So I'll look at that. If you're not trading, the index or futures, you could live in big tech and just trade these names depending on their up or down, and their demand up or down, and their supply, where their supply is relatively. So I'm pretty familiar with Apple. Let's take just a quick peek. You can drop down this menu and look at supply. When I see Apple doing this and the supply really rising, it tells me that there's not as much appetite for risk. There's more hedging. There's more coverage. This can always sort of go the opposite way and start to unravel, and people can cover their short shares on this short volume. But as it appears now, I don't try to hop into things that have rising supply. We're looking for rising demand and falling supply. So those are the 3 things. I talk sometimes about behaviors, fast trading, starting to see some fast trading pick up, but that's not really, there's nothing that's giving me any clues there right now. We had a little bit of a sell-off this morning that I think people are going to attribute to jobs, but nothing in the behaviors have been showing me that move was going to happen. I think it was more so just this concept that we're, the 7 biggest components are peaking with demand, and so it was likely that we'd have a little bit of risk off. So again, just to recap quickly, start in the dashboard. I'm going to first look at what broad market sentiment's doing. After that, I'm going to look at the number of components. And then third, I'm going to look at what's big tech, because as we know, a lot of that money is going to flow into ETFs, and that's going to, a rising tide lifts all ships. So again, I can sort these by demand. What I am seeing here, and we'll get to this later, is when these are topped and this starts to go down, it's difficult for the market to rise. It doesn't mean it's going to fall apart like we've said before. I'm still of the opinion that there's a lot of money out there that's chasing, and so it's more and more difficult, more and more likely that the dips get bought even at this point. So those are the 3 things. Once I've gone over broad market components and big tech, I also have a mega cap portfolio. I think Tim has one of these. Brian has one of these. I'll look at our daily trading ideas. And so I tend to stay in momentum when I see both broad market pushing up, big tech pushing up. Momentum is filling with names. What I'm going to go to is I'm going to look at momentum. I mostly trade momentum names and things with higher volatility and higher liquidity. I'm going to sort these by probability. So, I'm looking at these top 4 names. So when I write the notes, just so you all know, on Wednesdays, I'll kind of look at these names. There's occasions that, one will really stick out to me. I say, wow, that's a great name. Depending on where we are in both the futures market and where we are as far as a price on SPY, I may be looking to get in on something, and depending on the price of it, I may be looking to get in on it down half its volatility, or I have a couple alerts set on these names that I'll actually find, what's half of 4%, or what's half of, or what is 4%, and I'll set my marker there, and I'll get an alert, and I can kind of judge it against the backdrop of the broad market of big tech. And make those decisions. So that's really what we're looking. It's a top-down view. It's broad market sentiment, number of components, big tech. I want to see all those things lining up. If we're in a really strong move, I can the probability is one of these higher probabilities. I can jump right into those. As we get late in the move, as we are now, as I think we are now, I'm sort of getting a little more hesitant to jump into these names. But if I see, I usually wait about 30 minutes after the open. And if these type of names are down half their volatility, either, 10 o'clock Eastern time or come noon, it's likely that it's really probable that those are going to rise in the next few days. So that'll give me an excellent entry. So that's all I'm going to sort of cover for now, is just sort of this top-down view of how to use Market Structure Edge, how to make decisions with it. I know we have a lot of people on here, options traders, and we have, portfolio balancers and managers, but that's sort of a broad-based view of Market Structure Edge. And I'm going to toss a big thumbs up back to Brian. And
I can hear you now, Henry.
Oh, you're back. Okay,
we're good. We're
okay.
good.
So,
Hey, can you do me a favor? Can you go back to big tech, and pull up Apple?
Yes.
So when I was looking at this example that Henry showed earlier, note the rapid rise in short volume. If you were looking to pick up Apple and go long Apple, that's a really tough one to go long into, right? It just tells you that pricing is more than likely going to be fairly choppy, and you can see the pricing action here over the last week as short volume has risen in that manner. It's one thing that Market Structure Edge does for me is it helps me to avoid a lot of bad trades, to be honest with you. It really helps me. I'm a former buy-side trader, and I did not know this when I was in the profession. And a lot of times I would just honestly trade off a price. Like, oh, that price looks attractive. It's lost, XYZ percent. This has got to be a good entry point. Maybe it is, maybe it isn't. But when we're trading supply and demand, it gives us that much more assurance. These are central tendencies, obviously. It's not going to catch everything. But, that's a really clear signal. Hey, right now, I should be avoiding Apple. So I just wanted to, point that out, saw that when Henry was going through it.
Yeah, no, absolutely, Brian. I mean, what I think the best thing that market, I look at price action. I think we all look at price action. I think everybody has some background in charting. This looks, this looks like a consolidation breakout. If you're like, oh yeah, you're looking back a week or so, or a couple weeks, and you're saying, yeah, Apple's getting up to that 229, 230 level. Oh, look, it's going to push out. It's going to break above 230. Well, yeah, possibly. But the moment you see it go from 37% short volume to 45, and then now today up to 55% short volume, I'm not sitting on that trade. I'm not waiting days for that thing to pan out. And that's what I think a lot of, more technical traders are missing, is this sort of behind the scenes look at what's happening with supply and demand. So, yeah, thanks for taking us back to it, Brian.
Yeah, no, absolutely. I'll go ahead and share my screen and pick up a couple of things. Thank you so much, Henry. That was really good information. I'll start with the daily trading ideas. And I thought I had everything deleted. Sorry about that. Let me go ahead and go to daily trading. Just wanted to present a couple of different ways to think about this. You've heard me talk about, I follow a very similar strategy to Henry. I will typically go by probability, and then I will drop the higher probability names into just a watch page, and then watch how that is progressing during the course of the day. You can drop it into anything you want. I used to use a Yahoo page, and then it got really confusing, so I just switched over to just a free CNBC page. So you can see today, these are the names that I dropped in there. Some really good momentum action here with today's trading. SMCI was up sizably earlier in the day. I think it was a Department of Justice article that came out, Wall Street Journal, that brought that down sizably. But I wanted to give you a couple of different ways that I think about it. I do exactly what Henry was mentioning. I will look for, ideally, if I'm looking for YMM, that ideal entry point is, down 2% of its daily volatility. Well, if you get names like today, and if it's strong at the open and you want to trade these momentum names, you might not have that opportunity. So I was looking at some of these names this morning, and these names got away from me really fast, first thing in the morning. But I was looking at DFS, and it didn't get as far away as everyone else. It still looked like a pretty good potential. It was within the daily range in terms of this entry range. I went ahead and bought it, and I closed out the position before today's call. But sometimes the point here is sometimes you can enter into positions even if it doesn't lose a good portion of that volatility. Another way that you can enter into positions is, I'll go back to this page. A couple of days ago, the market was weaker at the open, and basically all the names I was tracking were red. There was like only one or two green names. Well, guess what that tells you? If money is flowing into a name even when the market is weaker, that might be a potential name to look at. It was COHR a few days ago that was kind of poking its head up above everyone else. It never lost all of its volatility, but the point was it was stronger than everyone else. So mid-morning, maybe hour and a half into the day, I went ahead and bought that, and intraday made 1.4, 1.5%. So the point I wanted to share is that, ideally you're looking for, losing part of that intraday volatility, but there are other ways that you can approach these trades. There's been obviously a lot of momentum in the market, and we can see that with the momentum names increasing, and perhaps not surprisingly, they've been following, basically the trajectory of the market going higher. Sentiment rising rapidly. What's that going to produce in the market? A lot of times, a lot of momentum opportunities. Well, we're certainly there, right now. Maybe it's just me, but I think perhaps the focus might shift back to low volatility here during the next couple of days. Wanted to share with you the last couple of times that we've moved above the red line. And I mentioned this in today's market desk note. I like to think of the red line as stretched conditions. The market's just getting a little bit stretched. Look what happened last time. We move above the red line, and it was 10 days later when we went back below it, 2.1% declines. Now that's not the norm, actually, and I'll quickly share with you an Excel spreadsheet here in a moment. But I just wanted to share with you, look at what happened last time. The trading got very choppy, and by that I just mean, you're up one day, you're down another, you're up one day, you're down another, that type of activity. Look at trading back in July. We move above the red line. We're up, we're down, we're up, we're down, we're up. Very, very choppy trading. And in this case, we went a little bit lower as well. So the last couple of times that we've gone above once again, I'll just call it, you can call it overbought, you can call it stretched, whatever you want. But when we move above that red line, it just becomes more difficult for the market to continue to post gains. For the veterans, you've seen me share this with you before. I don't spend a lot of time on it, but I want to just give you an idea of what that looks like historically when we do move above 6. And this is going all the way back to the beginning of 2020, just measuring when we move above 6, when we move back below it, what was the performance, for that stretch. And like I said, I'm not going to take you through all these data points. But if we look at the last 4 years or so, this goes through March 2024, 70 basis points. So when you're above that red line, we tend to average 70 basis points, and that tends to be a 10-day period. So that's the norms. Like I said, the last time in July, we were down 2.1%. You can actually see back in March, we were actually down as well. So part of the tendency this year is we're starting to see just a little bit of pressure when we move above that red line. So that's what red line trading is. Let me go ahead and shift back here. I think I covered what I wanted to there. Henry, have any questions come in? Looks like you're muted.
There we go. Thanks, Brian. Yeah, so there's Benham has a question about supply and demand divergent, and I'll go ahead. And so we talk a lot about divergence, rising supply or rising demand, falling supply. And so I wanted to jump in what I'm looking here right now, and what do we mean by supply and demand divergence? So there's actually a filter for those of you who don't know. You can create a dynamic portfolio. So first you're going to click on create portfolio. There's sort of two options. You can create a static. I think I mentioned semiconductors on Wednesday. Put all the semi names if you want to sort of bunch them all together. I have a portfolio of semis just so I can see what the whole lot of them is doing. The other function for creating a portfolio is dynamic portfolios. So you jump in, you click dynamic portfolio. All these filters, what you can do, and these happen, the nice thing about a dynamic portfolio is it updates every day automatically. So if you have sort of a chosen set of parameters that you're looking for, you can come in here to the dynamic portfolio. So we're talking about supply and demand divergence. I like to look at, it's obviously not so obvious, but it's a ratio of supply versus demand. The thing that sort of confuses people is it tends to be the right way to filter is between 4 and 5. And so I can go in here, I can select under filters, I can go supply and demand divergence. So this is a function that, instead of having to say we want sentiment above a certain or short volume below a certain, we can just take the supply demand divergence. So what I do is I'd go above 4.5. I also added, if you just do that, you're going to get a lot of names. If you also do by market cap equals mega cap. So I only want to look at stuff that has that's mega cap, looking for more liquidity, and I click filter. What I'm going to find is 12 names. So I can, by default, these names are going to have high demand and lower supply. But that supply and demand divergence, that's what it's going to give you. I don't use this because I tend to more often use the daily trading ideas because those are optimized. Like we've back tested those significantly. But if you have specific names, it's a great way to search for these, and you can sort of adjust these parameters as you see fit. There's all these. You can, a lot of the time we'll just add a volatility metric to see, what are the things that are moving the most in the last few days. So anyways, that's one question. And then I think hopefully, Benham, that answers your question. What else did we have from Corey?
Henry, what does that actual number mean? So the 4.5, what is that speaking into?
I don't know that. I'm dodging the calculation a little bit because I don't know how our math team comes up with that number. But what I do know is that as you filter between 4 and 5, it's a ratio of supply and demand. I think it's a 5-day. ratio, like,
Yeah.
like that, the number is a 5-day average. But I couldn't tell you if it's what the actual, which number is dividing which number. But I think it's something that's not, what I do know is you got to keep it above 4 and below 5. Otherwise, you're going to get nothing for results, which we used to use that a lot, but we've sort of, I think what we figured out is like the daily trading ideas give better historic probabilities than just divergence.
And just to go along with what Henry was saying there, from what I understand in terms of that as well, like I said, I have not worked with the math team, but I understand that to be a standard deviation calculation, and it doesn't, between 4 and 5 works just fine. It doesn't have to be between 4 and 5. I would just suggest starting off with maybe north of 1 and see how that works for you. That's actually what we use for low volatility and momentum, is it just has to be greater than 1. So if you're playing around with that a little bit, I would just start with north of 1, and then you can kind of adjust it as you see fit. So hopefully
thanks for clarifying, Brian.
Hopefully that helps out a little bit.
Yeah.
Why don't we show daily values for broad market sentiment rather than a 5-day average? Bill, great question. It over time we found that the 5-day average just works better. Sometimes the daily average, as you can imagine, can be very volatile, and you might get a volatile move higher one day, and then it smooths out the next day. So it's just a smoothing mechanism. What we will do from a market desk note perspective, if we see anything in the daily moves that merit your attention, we'll let you know. We'll fill you in on that information. But just think of it as a smoothing out mechanism, and it just helps us to avoid some of the outliers, so we're not jumping one way really rapidly and then jumping the other way and back and forth. So just helps us with some of those. Corey, Henry gave some information. What times do you normally make trade entries? It's a great question, right? In terms of the daily trading ideas, there's definitely different ways that you can approach that. Tim will sometimes put entries in before the open. He might calculate what 4% volatility is, and like, okay, I want to potentially buy at 2% lower. He might put in a limit order, a 2% down. That certainly does work at times. That stock might continue lower from that point as well. Corey, to your point, most of the volatility happens near the open. I'll let some of that early trading happen. This is just a personal preference. Many of you have different ways of approaching it. If I let some of that early volatility play itself out, I'm less likely to get run over. I might not capture all of that up move, but it might be something like COHR from a few days ago, where I can see which stocks are stronger that day and which ones have potential for continuing to make a move higher. So like you, Corey, if I'm trading on an intraday basis, I'll look at that kind of 30 minutes to an hour window. It doesn't have to be then. Sometimes trades will open up a little bit later in the day. And there are times as well where I will look at it at the end of the day. So in other words, you have a great supply and demand setup, and there's nothing wrong with the market right now. What I mean by that is it's a good structural setup, but something's weaker by 3% days end. That's probably a really good, purchase. Now, recognize you do have to hold that overnight. The ideal trade would be, like being like a fast trader and being in and out same day. That doesn't always happen, of course. But hopefully that helps, Corey. I do a little bit of both. If I'm trying to catch that daily trend, I will go into it kind of 30 minutes to an hour into the day. like I said, you can go into it and set orders before the market opens. You just have a chance of potentially getting run over on some of those orders. Um, let's see. Bainum, currently we don't generate data for other ETFs. So we can handle ETFs. What we're trying to avoid, though, is really muddying up the system, because most of the ETF trading is going to be, or a good portion of it is going to be in derivatives, and that really kind of muddies up all of the other equities and the looks that we're looking at. You can build those. It takes a little bit of work, but I'll share with you some of my portfolios. Let me go ahead and share my screen. Once you build it, then of course, you have it. And like Henry, I've got a number of different portfolios. Of course, our momentum, our low volatility. I have an all equity. I have a Dow Jones. I've got the FANG stocks, large cap, Magnificent Seven. You can see I have a number of them, but I have the triple Qs. I have the SOX. Names like this, it takes a little bit of work. I had to input 100 different names there. Had to input 30 on the semis. But you can look at those, even though it's not looking at the ETF per se. You can get the same type of performance in terms of what's going on there. So hopefully that helps. And once again, we don't necessarily track those ETFs because we don't want to muddy up the waters there. Steve, you had a question.
Yes, it's not a question, just a recommendation for when you're using all of Market Structure Edge, regardless of whether it's the daily or doing some deep digging. I have found that watching the news at the same time, before you hop in, and that goes along with you waiting a half an hour, you need to know what's happened to that stock that day prior to jumping in at 2% down. SMCI, like you said today, with the Wall Street Journal article hitting, if you're unaware of that, you can just get hit right across the head. So
Yep.
Keep an eye on the news too.
Yep. No, that's a great observation. I always check the news before I enter into any of those trades, especially if they're lower on the day. We're starting to move already into earnings season, so just be aware of that as well. Buying before earnings is a little bit of like tossing the dice at the roulette wheel. It's just a toss up. It's a bet. You can be wrong. You can be right sometimes. You can be wrong sometimes. I just try to avoid it. Maybe some of you are really good at trading around earnings, but it can just be a giant bet. And like I said, I just as much as possible, I try to avoid that. Oh yeah, you mentioned Viking hit you the other day. Yeah. So momentum names, recognize what they are. They are momentum. They have a lot of intraday volatility. That volatility can work for you and it can work against you. That's part of the reason that we need to have stop losses set up on our trades. So if we do have a trade that doesn't work, and these are central tendencies, they're not going to work 100% of the time. So we do have to have those stop losses in play to have a 2 or 3% loss and not to have a 10% loss.
Can I make a couple of comments?
I'm sorry, who was that? Barry?
Barry, yeah, go for it.
Yeah, please.
Yeah, so I think I'm in my third year of using Market Structure, and to this day, it still surprises me the number of people that don't understand short volume, that don't understand the dealers have 35 days to locate, where we have now 1 day, we were 3 days, I think. So they don't understand that dynamic. And, one of the things that I found interesting, and to Steve's point is right. News can cancel everything regardless of what Market Structure is telling you. But what I found interesting is when you combine market structure with options gamma, whether it's positive or negative, it's like a double filter because it really gives you an idea of where the dealer is sitting, both in terms of stock and with options. I know there's a component that you use for derivatives in the calculations, but for me, it's been rather fascinating because if I can see that, momentum is to the upside, meaning supply is rising and demand is rising, supply is falling, and there's positive gamma, there's a very good chance that stock's going to go up, and inversely the same. And it's just been interesting how I've been able to use the two over the past year to go in both directions. And then I did have one request.
Yes.
I think it's time that for the daily trading ideas that we have, I think they're bullish. I think we need to add a daily to the downside where it does the same thing, but just the inverse.
Yeah.
That's an auto filter.
I think that would be fascinating.
Yep.
I know that would cost money for engineering and stuff, but for me, I didn't see the negative momentum in your portfolio, but I use the same because I see, when the momentum is going up and volatility is going up, okay, great. But when I see them decline and I see my negative momentum starting to fill up, it's just an added nuance that kind of tells me how to read the tea leaves. Because, not in every instance does market structure work right away. Like you say, sometimes it takes 3 or 4 or 5 days for it to play out. And this just gives you better confidence in terms of what direction a particular stock might be going based on what you're seeing in what I call the macro market structure tea leaves.
Market macro structure tea leaves. We're gonna trademark that.
Can I use that in tomorrow's note, Barry?
Yeah, really. So the one thing, I think the tendency is to get really focused on the data and focused on, the lines. But, a lot of why we talk about, we always look at the data first and then we go to context. And so, that's why we put an emphasis on earnings. It's why we put an emphasis on expirations. It's why we put an emphasis on weekly data releases, is that that's the other backdrop. Steve, you mentioned it. Yeah. If there's news, if there's a Fed decision coming up, like we saw that the data was distorted because there was a Fed decision. So if you're taking just the data and trading on that, you're missing, a third of the pie, right? Or let's say, half of the pie, because half of it's divergence and broad market, and the other half, I think, is making sure that the context is aligned, whether that's on an individual basis or that's on a broad market basis. So yeah, I just want to make that point. As much as we focus this time on the data, also giving credence to the context as much, and that, just not to mention that. And sometimes I feel like goes without saying, but then when Steve says, what you should mention is if something happened to that stock, don't be full leverage on a buy limit that you're not looking at when there could be news. So it's a great point to both Steve and Barry.
Susan, you had a question about understanding short volume, and that's perfectly understandable. That it can be a difficult concept to understand because it's different than short interest. It's a very different concept. The way I think about it is I think about it in terms of borrowed shares. Brokers don't carry as much inventory as they once did. They're not allowed by law to do so. So the S&P 500, when you have daily trading going on, about 50% of trading is coming from borrowed shares. So the way that you can understand that, if you have 100 shares to buy in the marketplace, that 100 shares, half of that is going to be filled by borrowed shares. So that's market makers borrowing shares to facilitate trading. It's just the way that the market works. What you want to think about from a short volume perspective is just to understand what the norms are. So I'll go ahead and share my screen and we'll kind of work towards our concluding comments at the same time. If you look at the broad market in terms of short volume, The norms over the last year have been roughly 50%. And you can see right now it's at about 50%. When we move above that threshold right now, it gets difficult for the market to hold on to gains. You can see that same point being made in early September. Short volumes go up, market goes lower. That's a very typical dynamic. Recognize that each stock will also have those dynamics. Google short volume tends to be much lower than some of the other ones. It's just the way that those trade. Just look at their norms when you pull up those individual stocks, and you'll see what I'm talking about. Let's take a look at the path ahead. As we look at this path ahead, what I'm really interested in is what will potentially happen at a month-to-month, quarter-to-quarter transition. Look at the last two periods here. So end of July, and this is end of month activity. You see that short burst higher, that's end of month options expirations. Look at the market immediately move lower. That was a drastic move lower. Whole market got oversold. We got a rally. Look at the end of August. It was exactly the same thing. Market moves higher at the end of the month. Market moves lower in early September. Now, usually the beginning of the month, we call it a new month, new money dynamic where money is coming into the market. That was not the case the last 2 months. Are we establishing a new norm? Were these outliers? Were these seasonal factors? I don't know, but it's certainly something I want to be aware of coming into early October, especially with the whole market getting stretched right now. Let's move to big tech for a second as we consider about what is potential in terms of going forward. Big tech, the last time that big tech got this stretched, it fell from these levels, and so did the market. So you see big tech sentiment falling, you see the market falling on the other side. When big tech finally started to catch a little bit of a bid, well, that's when the broad market caught a bid as well. What are we doing right now? We're just beginning to fall from a sentiment perspective. So you combine what's going on with big tech, the fact that we're coming up on a quarter-to-quarter transition, it could potentially be a little dicey. Now, maybe absolutely nothing happens. I don't know. But you look at what's happened the last couple of months. You look at the potential for big tech to fall. Now, maybe it just falls to 7.5 and it rallies from there. I don't know. That's why we watch the data every day. And of course, the wild card as we get into the next few weeks, potentially the election, right? We get potential uncertainty from an election perspective, and the old dynamic. The market hates uncertainty. We'll see how that plays out. We have 30 or 40 days before the election itself. So I think that's everything that I wanted to cover. We're running close to the end of our time. Any last question? Corey, your point about stop contributing to 401ks for groceries. Henry and I were wondering about that same thing. Let's see, even if shorts weren't added, if they would just add the filter rule. Okay, thank you, Joe. I appreciate that comment. And Henry's comment. Great comments. Anyone, any last words from anyone here today? Henry, do you have any last things you want to mention? You're muted right now, Henry.
The only thing, and this is going back earlier to our conversation, someone asked about timing within the day. The only sort of thing that we know about market structure is tracking happens at the end of the day. So both in the morning when I see that we're nearing a peak and I see the futures way up early morning, it's likely that that's going to revert. Also at the end of the trading day, we know that there's a lot of ETF money that's trying to get as close to the median price as it can get. And so that can cause both a chasing at the end of the day, but also, we're obviously going to see the buying and selling at the end of the day. But a lot of that isn't dependent on demand, it's dependent on tracking. So I don't know if you had anything else to say about that, Brian. But I know Tim loves the end of day trade. That's what I also know.
Let's see, considering all of the parameters, and Henry, maybe I'll let you respond to that. We're kind of running up at the end of our time. But
yeah, Venom, you know what? Send us a message and we can jump on a specific question later on. Yeah, I think we're just about at time, but great stuff, Barry, Steve. Thanks so much. Appreciate you guys jumping in. It's always helpful.